So there is almost no question we are entering a trillion-dollar tidal wave when it comes to the markets. And one of the main backbones of all of this right now is the fact that we have corporations, companies that are kind of leading the charge when it comes to artificial intelligence that generate tens of billions of dollars in free cash flow and are kind of able to support this trillion-dollar tidal wave I mentioned without even putting all that much strain on the balance sheet, which is a clear differentiator between the artificial intelligence bubble we're seeing right now and the dot-com bubble we seen back in the 1990s. Now, in this video, I'm going to be going over 3 ways that artificial intelligence could drive the markets higher over the next 1 year, 3 year, 5 year, 10-year time periods. And this is kind of a video in contrast to the one I posted last week, which kind of went over the AI-related headwinds, and you can click here to listen to that video. But in this one, I'm going to be talking about the huge tailwinds the AI market can pose for not only technology stocks, but other areas of the market you might not even be looking at right now. And as always, everybody, if you want these stocks that I am buying, selling, model portfolio updates, the Discord, all that type of stuff, we just added a brand new AI stock to the bull list last weekend. So you'll be able to get that stock and everything else for just 99 cents. It's the best deal you're going to get for an investment research platform like this. So you can head down below in the description and grab that deal. But let's dive right into the video. So the first one I'm going to go over is probably one of the most underrated ones out of all the AI tailwinds, and that is productivity. And there is very little doubt that pretty much every single form of major technological advancements we've seen in the world today has resulted in substantial productivity gains. I mean, we can think real old school and go electricity or potentially even railroads. And these seem like very archaic pieces of technology now, but I mean, if we look back to the dates when they started coming to fruition and started benefiting the economy, these were about as big as artificial intelligence is today, despite how old they might be right now. And if we think of AI's ability, even in its infancy today, to make very simple tasks routine and automated, we can see how this can help companies become more efficient. And from this aspect, this tailwind, I'm going to be speaking primarily on the profitability standpoint of it, whereas in the next segment, I'm going to get into the revenue generating. But both of these are ultimately kind of double whammies in terms of overall potential growth for these companies. Productivity is arguably just as important as sales, or arguably more important. If a company can expand its margins, it does not even need to grow revenue in order to post higher earnings. And ultimately, the market does value these companies based off their earnings. This is why we often see the S&P 500 quoted as its multiple in terms of earnings per share. So again, I'll speak on the revenue portion next, but the earnings portion, the more companies can utilize AI to turn relatively mundane tasks into automation at a fraction of the cost, this is a massive benefit. Now, a lot of people could potentially see this as a negative when it comes to society, when it comes to AI replacing a lot of jobs, but the fact of the matter is, you can go back to pretty much any technological advancement in history and kind of come to the conclusion that it does end up replacing jobs, yes, but overall it ends up being a more beneficial, advancement to the economy. So a prime example of this would have been around 100 years ago when they really started to heavily automate and kind of machine-based agriculture. This ended up replacing a ton of labor jobs in the agriculture sector. Ultimately, this situation, the agriculture, going more machine-based, replacing manual labor, it put millions of people out of work, which again, that short-term shock definitely did cause a bit of disruption, but when it ended up happening is a lot of these workers moved from that agriculture segment into manufacturing and other types of jobs, which ultimately vaulted U.S. GDP over the years. This was a short-term detriment, but a significant long-term benefit for the economy overall. There are specific studies that show that AI alone could add around 15% to global GDP by 2030. Now, to just give you an example of how huge this scale is, this would effectively be the same thing as adding an entire other China economy to the globe by 2030. So we have the global economy growing to that level by 2030. You can pretty much double up China, and that is how much AI is expected to contribute to global GDP. And they do predict that the vast majority of these gains will come from increases in productivity. So as I had mentioned, more mundane tasks, they will be handled by AI, which will allow these companies to allocate human capital, I guess you could say human minds, human labor, to do more important and more mission critical, higher quality tasks. So, let's think of an engineering company like Siemens. So they use AI to kind of design and, simulate industrial systems. So it can simulate the performance of these systems. It can detect faults in these systems, and it can alert them of any issues before they actually occur. So the end result has been, they've kind of been testing this at one of their facilities and have found that their defect rate is near zero on these systems. And it has boosted overall output costs without adding a penny to the company's overall labor costs. So what does this do? It ultimately takes those engineers that would have traditionally had to work on these defects, detect them, kind of mitigate them. It allows them to focus on other higher priority areas of the company. It can lead to more research and development instead of just added operational expenses of, eliminating defects and focusing all of this from a human perspective, not an artificial intelligence perspective. And now they can focus on future projects to ultimately drive more profitability. And we can look to a company like a bank or insurance company. A lot of these companies still rely on human underwriters. They are working their way to be more AI integrated, but now they have human underwriters. And what do humans do? They make mistakes, especially when we're talking about underwriting. It is not a perfect science. These people are very, very good at their jobs. Yes, the more you can automate the very mundane tasks inside of underwriting overall, you can get these people focusing on more high-level stuff that will drive profitability for the bank. And if it can automate the very simple tasks of underwriting that are prone to human errors, it can eliminate those mistakes, which will ultimately drive profitability. And the advancements made with their human capital, their human labor, can lead to higher profits in the future. So everybody, just quick break from the video. If you like the video, head down below, like it, subscribe to the channel, comment if you want more videos like this. Let me know by liking, by subscribing, and by commenting, and I will continue to push out great content like this. But let's get back to the video. So the second one here would be new products. Now, I spoke in the first one, which would be an efficiency standpoint, a profitability standpoint. Now I'm going to speak on the element of new products, which is more of a top line sales element. If you combine both of these, you truly do get a multi-faceted tailwind for the markets in general when it comes to artificial intelligence. It is not really like anything we have ever seen before. So this area, like the new product area, it is so expansive that I probably won't be able to cover this in a single video. But what I'm going to tell you is a lot of companies will be able to develop and initiate brand new products that will bring in brand new revenue streams for them that they have never seen before, simply by adopting artificial intelligence. Let's think of something like NVIDIA, probably one of the largest beneficiaries of artificial intelligence on the planet. We can look back to 2022. Gaming was actually a larger portion of this company's revenue stream than data centers. Now look at this explosive growth. And NVIDIA didn't really need to do anything to experience this. Ultimately, it had data center production, data center revenue ChatGPT, pre the big AI boom, but it just so happens that they ended up benefiting substantially from this. It opened them up to a revenue stream that nobody would have predicted pre-AI. And we can think of businesses with very deeply ingrained pieces of software. Let's just think a Microsoft 365 who has been able to integrate its Copilot AI platform into that area of their software. This opens Microsoft up to an immediate avenue of new revenue generation from a piece of software that already has over 400 million users. Imagine opening up the ability to upsell over 400 million clients on an AI piece of software that wouldn't have even been considered or wouldn't have even existed a year ago. It takes a lot of these hyperscalers, especially the ones with promising software, and it gives them an ability to, despite being worth trillions of dollars, continue to grow at a relatively fast pace. Now, one could counter this with the fact that many businesses are not actually finding a lot of value in AI systems, investments made into AI systems, which I would 100% agree with at this point in time. However, that is not to say they won't find value in 2 years, 3 years, because overall the technology is in its infancy. And although there is a lot of I don't want to be blunt, but I guess I should be, completely useless AI platforms that exist today, ones that are very much creating a solution and are in search of a problem, as Constellation Software would say. There's actually a lot of AI that has very viable use cases that people are very willing to pay for. So, I can just think of this video editing process as one of the prime examples. Prior to AI, I would have had to go through this entire video and cut out the silences, the retakes, the awkward cuts. Now, artificial intelligence effectively does that in a matter of 30 seconds, whereas prior it would have taken me hours. You can see the huge viability in pieces of software like this for somebody like me that can save me a ton of time. And as a result, I'm going to stay subscribed to products like that ultimately improve my efficiency. It's not just technology companies either. That's one of the main things I want people to take away from this video, is it's not just tech stocks. We can look to waste connections, waste management, things like that, waste disposal companies. Probably the last thing you would think of that is exposed to AI. They are testing artificial intelligence on conveyor belts in sorting facilities that can effectively sort the material coming on these conveyor belts and eliminate the need for humans to be actually doing it themselves. So they mentioned this could potentially cut labor costs in those sorting facilities by upwards of 50%. And we look to companies like Caterpillar, heavy equipment companies. They're integrating AI into their vehicles, which will not only increase fuel efficiency, it will reduce overall potential incidents from a safety perspective, and it will also eliminate operator error when it comes to heavy hauling, any sort of machinery work you can think in heavy construction. And I can tell you right now, as somebody who actually worked in that industry for quite a while, these companies, say it be a major oil company, they will pay millions and millions of dollars for efficiency like this, for safety like this, things like that. So this is a huge draw to companies who can now develop products and add revenue streams that would not have existed even a year ago. So point number 3, the ripple effect. The ripple effect of artificial intelligence is market-wide. When we think back to the dot-com bubble, we can think of a lot of capital and a lot of potential growth prospects heavily centered in technology names. Let's think of, back then it would have been internet names, networking names like Cisco, things like that. We could think of fiber producers maybe as another one, the ones building out the fiber networks. But you'd be hard-pressed to find a particular sector of the economy, of the stock market right now, that will not be impacted by artificial intelligence. If you think it is only these tech names, you're kidding yourself. There is a lot of potential from a wide area of the market. This is not just a Silicon Valley story. This is a global story touching virtually every sector of the market today. So the hyperscalers like the Amazon's, Microsoft's, Alphabet's, they're building out the data centers. Utilities, they're kind of prepping for that large-scale upgrade in overall infrastructure needed to actually supply the power. Pharmaceuticals, they're investing heavily in artificial intelligence that could end up reducing clinical trial times, which could get them drugs to market quicker and ultimately boost their profits. When we look to even something as simple as agriculture companies, they're looking at artificial intelligence technologies that is allowing them to apply herbicide to particular crops only where weeds exist, not spraying entire crops. First off, this puts less chemicals in food, but it also allows them to substantially reduce costs in order to, use artificial intelligence to actually identify the problem in a large crop and apply herbicide to that specific area instead of laying it out throughout the entire crop. So if you think the AI wave stops at tech stocks, you do need to do a bit more research, because this is unlike anything else we've ever seen. This is going to touch a lot of areas of the market. And another key difference here, and another, kind of key driver of what makes this so bullish, is a lot of the largest investors in artificial intelligence right now. We have the NVIDIAs, the Googles, the Microsofts, the Oracles. They are effectively dumping hundreds of billions of dollars into artificial intelligence without even putting a slight amount of strain on their balance sheet. So, we can look to a company like Alphabet. They can pay off their entire debt load on their balance sheet with around 9 months of free cash flow. And keep in mind, this is free cash flow after all those AI capital expenditures have been accounted for. This situation is going to allow a lot of profitable companies who have core business models that are some of the most profitable on the planet to expand into this infrastructure, which is going to, first off, vault the timeline of it, and secondly, kind of vault the rapid expansion we're going to see across the market and not just in tech plays. What started out as a tech story, I guess you could say, in 2023 has firmly moved into the situation where this is pretty much just an entire market story. And the other element here is artificial intelligence does have the potential to be deflationary in nature. We've had sticky inflation over the last few years here. There is a chance that artificial intelligence could increase productivity to the point where these companies are able to boost profits without necessarily boosting sales all that much. So if it can bring down inflation back to that normalized, 1.52% pace, we could get lower rates from the Federal Reserve, which is generally bullish for stocks. So, zooming out, it is fairly clear that artificial intelligence is not just a passing trend. It is definitely here to stay. And I think it is ultimately going to be a foundational disruption to how the global economy works in a good way. If history is any sort of indicator, most of these disruptive technologies today, they tend to first disrupt and then they help expand the economy drastically. And I think artificial intelligence will ultimately be that as well. So is there a chance that we are potentially early to the party here? Yes, there always is. I have very little doubt that AI is going to change the world, but whether or not it does so in the next 2 years, which is what the market is pricing in, we have to be able to, accept this fact. The market is pricing in very early profitability and, economic disruption from AI, but what if it takes a decade, much like the internet did, and the dot-com bubble quickly re-rated when it realized it wasn't going to be all that profitable all that quickly. But one can very easily argue that there is small pockets of AI bubbles here. Nosebleed valuations, highly unlikely to ever become strong investments in the future. But one could also argue that there is a lot of potential AI tailwinds for the broader part of the market. I think we're getting a bit too tunnel vision focused on just those technology companies. This is going to benefit, one could argue, almost every single company on this planet. Whether or not they're able to drive profitability from those benefits is another story, but it's hard to imagine AI not providing consistent tailwinds for the market in the future. Now, don't confuse this with the idea that the ones that are at the forefront of expansion right now will be the winners. Obviously back in the dot-com bubble, we had plenty of losers and we had plenty of winners. Amazon lost 95% of its value, and it ended up being, one of the largest companies on the planet today. So that's pretty much it. 3 potential tailwinds for the markets in regards to AI. These tailwinds don't necessarily connect market valuations with them right now. Markets, AI can be a very promising tech in the future, but the market could be a little too overzealous on it right now. But overall, I'm fairly bullish on AI's impact on the global economy over the next half decade here, the next decade here. And as a long-term investor, I am very, very happy to have exposure to some of the what I would call the most solid players in the AI space right now. And if you want to grab those players, my portfolio, hop on the Discord, the model portfolios, all that type of stuff, it's in the description. You can click the link below. You'll grab it for 99 cents. And we'll see you next time for more great Canadian content.